So let's talk about this. In a long and drawn-out U.S. presidential election, vote count last week surely overshadowed some of the biggest earnings in the Nigerian market, as well as other news items. So let's trade the news now with Chukwu, the CEO at Cowry Asset Management. Chukwu is also a policy analyst. Good to see you. Good evening. Welcome to the show.
Good evening, Bosin, and thank you for having me.
Thank you. It's good to have you here this evening. The IMF staff monitoring team on Article 4 consultations reported they were in Nigeria last week to discuss the review of the country's position. What do you think Nigeria will have to present to this IMF team?
Well, Bosin, what I think the Nigerian government official, which is the central bank and the fiscal authorities, will present to the IMF team is the progress we've made in terms of addressing some of the structural deficiencies or weaknesses in the economy. One of which is that the government has allowed for movement in exchange rate away from the 360 range to about 389 currently. And then we've also seen a shift in government policy as it relates to the pricing of petroleum products. We've seen the government as withdrawing subsidy on petroleum products. And we also see government adopting what they call service-related tariff for the energy sector, for the power sector. So these are some of the things that IMF had been pushing. And as far as I'm concerned, they are the things that the federal government delegates or representatives will be presented to the IMF to say, look, we've made progress. We've shifted from where we were when you guys came in February this year to a more market-reflective policy environment. And the other areas which I believe the IMF will also have to understand the situation we have found ourselves is that the issue of fiscal deficit, which was one of the issues they raised when they came for their Article 4 consultation in February. As it stands today, globally, because of the COVID-19 crisis, virtually all the countries in the world have adopted deficit fiscal financing to try to inject liquidity into the economy and moderate the level of contraction. So I don't think that will be an issue for IMF this time around. But the key things they will be looking at, the exchange rate flexibility, harmonizing exchange rates, eliminating subsidies, particularly petroleum product subsidy and subsidy on the energy sector.
Do you think this would most likely put us in line for this World Bank funding, budget support that has taken since April to come through up till October? Now we are in November.
Well, I want to believe that IMF, after the current consultation, will consider releasing the $3.4 billion they have already approved for us. As it stands today, the other drawback, which I mentioned earlier, is the issue of budget deficit. But I don't think that will be a weighty issue today, given that globally you need to stimulate the economy. The key things we have not fully addressed is that we've not really fully adopted a market-determined pricing for petroleum products. The government is moving towards that, but I don't think we've achieved that. I think there's still some inherent subsidy that we have in the pricing of petroleum products, probably because of the dislocations that the society has had in the past couple of months. The government would want to adopt a big bang approach in removing the subsidy. We still have subsidy on bridging, and until that is eliminated, you wouldn't say you have a market-reflective pricing for petroleum products. But on the power sector, we've seen a material shift. Last week, I think all the discos have adopted a new tariff, which are service-reflective, and the government is pushing that by the end of next year, they will have fully eliminated subsidy on electricity charges. So I think those are reasonable milestones that the government has achieved in the past couple of months.
Okay, let's check in, and I'm trying to just get a quick look at this. I'm sure you saw the share price of Dangote Cement, Lafarge, Boa Cement up to there. These are very strong numbers coming from the earnings that we've seen from these three large, big cement makers. If you put the three of them together, they account for a big chunk of all the cement that you produce on the African continent as of today. Now you look at the consumer goods as well, with flour mills of Nigeria, Northern Nigerian flour mills, and Nestle as well, including household consumer makers such as Unilever So, if you put this together, do you think these numbers speak to the resilience of the Nigerian economy during the third quarter, despite the pandemic, the various stages of lockdown, easing, and what have you?
Well, Boston, what I would say is that the industrial goods sector is actually, for me, the sector that one can say that has fully weathered or largely weathered the pandemic crisis. If you look at that sector, starting from Bua Cement, where the bottom line grew by 23%, to Dangote Cement, where the bottom line grew by 35%, and Lafarge, where the bottom line grew by 67%. And for me, what we saw was they grew both their top line and bottom line materially, but we also saw an improvement in cost management among the three companies, which is quite commendable. So one could say that this sector, the industrial goods sector, has strongly weathered the COVID-19 crisis beyond the imagination of anybody, because one thought that with the lockdown, we could see decline in demand, a decline in sales, and possibly contraction in bottom line. But contrary to that expectation, we saw the three of them record very significant performance.
Oh.
Then on the consumer goods sector, the major performers in that area are the flour mills of PLC and the Honeywell. Those two companies did extremely well in terms of their top line and bottom line. And one of the things I think when I was looking at those performances is that despite the lockdown, because of the nature of their products, we still saw consumption because of the size of the economy or of the population. Added to the fact that the COVID and a lot of intervention groups that tried to support households during that crisis made a lot of purchases from the consumer goods sector. So that may have largely insulated them from what would have been a slowdown in demand for their products.
Okay, that reminds me, part of the Kakovid statement just about 2 weeks ago, that some of the products that sugar, salt, whatever, flour, were sourced locally from local manufacturers instead of importing them. And that means that they have to be manufactured, they have to be packaged, the raw materials have to come in. Do you think this is a thumbs up for the government, the Kakovid team and the rest? Patronizing made in Nigeria?
Yes, as you know, the Kakovid is a private sector-driven association, of which Cowry is one of them. Basic thing that we did was, look, we need to stimulate production locally so as to sustain employment. And if we had imported those products into the country, and then that would have meant that we would have exported employment, and maybe this company we are talking about that did well in the third quarter would have seen contraction and possibly layoff of staff. So what we did was weigh in and close the gap in what would have been the market demand for their products, and make those purchases as well as sustain production in those companies and sustain employment.
So in other words, Johnson Chukwu, it is possible for Nigerians and Nigerian authorities and those in power, those who are in leadership at state, federal, local governments, to patronize made in Nigerian goods and consume them and grow domestic industrial manufacturing sector. The Kakovid thing just proved that it is possible. Whether we are manufacturing cars or it's just food items, whatever it is, we can actually make it happen here.
Yes, absolutely. And that's basic thing every country is pushing for. I mean, the government policies have been around encouraging Nigerians to consume made in Nigerian goods. The key thing is that if you do not patronize your products, you are not likely going to see those sectors grow, because it's the patronage that will lead to investment, and investment will lead to adoption of improved technology and production standards. And that's the only way you can actually build industry that can compete globally. If there's no demand for the products of a company locally, then that company cannot produce and improve its quality as to compete globally. Again, if you do not consume your products, you are basically exporting employment to other countries, and you can have no moral right to act that the economy is not doing well. So I think both private sector consumers and public sector consumers and the government must, as a matter of policy, ensure that we patronize quality-made Nigerian goods and services.
Okay, great. Let's talk about what are the chief concerns of business executives right now? Johnson, is it the virus? Is it the protest we just finished? Is it the economy? Is it insecurity? Or is it Joe Biden's election victory in the U.S.?
I think there are two great worries about by business operators. One is a level of insecurity. Both you may have observed that policemen are no longer on the streets. You can't really come out very early in the morning. Shops have been looted. There are still threats that hoodlums are having free reign. If you come out, you observe that there are no traffic lights, there are no traffic warders. So we're in some state of anarchy, and that's of great concern to business operators. Added to the fact that there was an upsurge in the coronavirus cases recently, and there are concerns that there could be a second lockdown. And we all know, just like the president said, that the economy cannot afford a second lockdown. So the business leaders are apprehensive that we can't afford a second lockdown. The issues around Biden's election, to me, is going to be on the positive. Of course, we've seen that reflected in crude prices. Two things have driven crude prices today. One is a Biden election, and then second factor is that the indication that they found a near vaccine to coronavirus. I mean, there's 90% chance success rate, according to the report we got today. So those factors are driving up crude prices. And we know that the economy relies a lot on the movement of crude prices, crude oil prices, to sustain flow of foreign exchange into the economy that lubricates other sectors of the economy.
I'm sure you're happy with the $42.89 where we are right now on Brent crude.
Absolutely.
Absolutely.
I mean, that will indicate that we may have some level of stability in the exchange rate and some level of certainty in terms of...
But Johnson, here are the PENGASSAN workers, the senior oil workers says they are going on a nationwide strike.
Well, for me, I think the government needs to engage them. I don't think anybody can afford, just like I said earlier, lock down the economy. And we know the critical nature of transportation system, which is basically driven by these workers. So the government has to find a way of engaging them to ensure that whatever is their grievances are sorted out. We really can't afford at this point, when we're just coming out of a 1-week lockdown of the economy as a result of protests and riots, and then we had 4 to 5 months lockdown from coronavirus, and then somebody is threatening to go on strike at this point in time. I don't think that is the appropriate way that they can. That's the only way they can relate with whatever is their grievance.
Okay, they should just try and sort it out. Nigeria can ill afford that at this point. Thank you so much, Johnson Chukwu. Have a great evening. We appreciate having you on the program tonight.